Happy New Year and welcome to the brand new calendar year, and I am super excited to start investing and hopefully make some positive returns from the S&P 500 in the year 2023. And if you haven't maxed out your Roth IRA or HSA, you still have until the tax deadline on Tuesday, April 18, 2023. My wife and I have maxed out our retirement contributions in 2022, and now I'm going to talk about what we're going to invest in 2023 for our financial independence and retire early. And I started my Fat Fire journey in 2016. And if you watch my Fat Fire video update on my birthday back in September, we are currently managing over $1.1 million in total assets. And if we hopefully make an 8% return by the end of 2023, our assets should increase from 1.1 to $1.4 million. Anyway, if you're brand new to my channel, my name is Sai and welcome. So in this video, I'm gonna go over what I'm gonna invest in my retirement accounts, Roth IRA, HSA, and the 2 taxable brokerage accounts for our early retirement. And one of the taxable brokerage accounts is for dividend investments, and the other taxable brokerage account is for growth investments. Please remember that this is not in any form of financial advice, so do not do what I do without doing your own research. Now, I'm truly excited for 2023 because we're getting ready to save over 70% of our gross income. And you can check out this video linked in the description below. Feel free to click the chapters below this video if you want to skip ahead. So the first one I want to go over is my thrift savings plan, or TSP, which is the federal government version of the 401k. I'm maxing out my TSP contribution at $22,500 for the year 2023, not including my employer match. Every 2 weeks, I'm contributing $866 to the Roth portion of my TSP, and the employer match automatically goes into the traditional portion of my TSP. I'm investing in 50% C fund and 50% S fund. I know that's very aggressive by having over half of my TSP portfolio in the small cap index fund. However, I believe the small cap stocks got beaten up so badly in 2022, down over 25%, and I'm seeing a potential upside going into late 2023 and 2024. As soon as the Federal Reserve cuts interest rates, I believe there will be a significant return on the S fund and possibly even the C fund. The C fund is basically the same as the S&P 500 index fund, and I believe those large cap stocks have been overvalued for quite some time. Not only do I think these funds will make a comeback soon, but I'm buying them at a significantly cheap value. And I'm not worried about preserving my capital because I'm still in my 30s, right? I'm 36 years old and I'm not looking to touch my TSP for another 24 years. And I personally don't invest in G, F, or I funds because I'm not just risk tolerant, but I'm already diversifying my overall net worth with the cash reserve. My allocation will remain 50-50 between C and S funds for the foreseeable future. When I turn 55 years old, I will most likely invest 100% into the C fund as I become risk averse. And you can also get my financial independence resources, including these spreadsheets, for absolutely free by visiting firesidechat.com/contact. You can also check out the Fireside Chat shop if you're looking to start your own YouTube channel, and I have all of my books and equipment at firesidechat.com/shopping. I also have both traditional and Roth IRAs. Over the years, I've had multiple 401ks and pensions roll over to my IRAs. While I invest most of my IRAs in index funds, I do keep some in individual stocks that I believe in the long term. I have the S&P 500 index fund in each of my IRAs, ticker symbol VFIAX. I'm also going to have sector ETFs, starting with Vanguard Technology ETF, ticker symbol VGT. This ETF invests primarily in the technology sector, which was beaten down in 2022 by over 32%. And this ETF will allow me to have some exposure to the largest tech companies like Apple, Microsoft, Nvidia, Visa, MasterCard, Broadcom, Cisco, and many others. VFIAX does the same, but VGT focuses entirely on the tech sector. And I do own a lot of shares in this one tech stock, which I will reveal later in my taxable brokerage account. But I'm happy to have some extra exposure to the tech sector in my IRAs. The other index fund I have in my IRAs is the Vanguard Total Stock Market Index Fund, ticker symbol VTSAX. What I noticed about both VTSAX and VFIAX is that their performances are very identical because their top 10 holdings are about the same. And if I had to start over with my IRAs, I would probably keep VTSAX because it's exposed to over 4,000 stocks, and VFIAX is exposed to 500 large cap stocks. And the one individual stock I own in my IRA is PayPal, ticker symbol PYPL. I started buying the stock in June, so my cost basis is still pretty high at $118. I currently own about 130 shares, or actually 136 shares to be exact, which are pretty close to $10,000 in the current market price. I would like to own more shares, but I need to make sure my individual stocks in my IRAs do not exceed 10 or 20% of my total portfolio. But in my opinion, PayPal is trading at a cheap value. With the stock down over 65% in 2022, I would like to own more in 2023 as long as it doesn't exceed my allocation cap. And my wife has her Roth IRA, and the only one she invests in is the Fidelity Total Market Index Fund, which is pretty much the same as the Vanguard Total Stock Market Index Fund. And that's it. That's all she invests in her Roth IRA. I know that sounds boring, but that index fund alone invests in over 4,000 stocks with the top 10 holdings in Apple, Microsoft, Amazon, Tesla, Google, Berkshire Hathaway, United Health Group, ExxonMobil, and Johnson & Johnson. She wants to be stress-free with investments. So this is a great way to be exposed to thousands of different stocks without doing much research. Now, I'm not allowed to give you investment advice, but if you need help with creating a budget or savings plan to achieve your financial independence, you can schedule a free one-on-one 20-minute financial coaching session by visiting firesidechat.com/coaching. Your savings rate absolutely matters more than the investment returns. We can chat about how I'm saving over 70% of my gross income in 2023. The next investment account we have is the health savings account. And if you're brand new to the FIRE journey, you probably didn't know that I can actually invest my money, and you probably can too, inside my HSA. And for HSA, I only invest in Vanguard S&P 500 Index Fund, ticker symbol VFIAX. I have Optum Bank for my HSA, and the bank requires me to hold at least $2,000 in cash and invest anything in excess of that amount. I don't want to go too much in detail about my HSA because I already made a video about it, linked in the description below. The next account is my taxable brokerage account for dividend investing. My dividend portfolio consists of 5 individual dividend stocks: Verizon, JP Morgan Chase, Walgreens Boots Alliance, Raytheon Technologies, and Pfizer. The average dividend yield between these stocks is about 4.5% in annual dividend yield. In 2022, I sold O Realty Income, which is known as a REIT or real estate income trust that pays monthly dividends. I'm a little bit worried about the direction real estate is going to in the next 3 years. Pfizer was the stock that I bought in early 2022 that has the potential growth in the future, which replaced the REIT that I held for about 2 years. The other reason is that REITs dividends are considered non-qualified dividends, which gets taxed as regular income tax, while Pfizer's dividends, once I hold the stock for a certain period of time, are considered qualified dividends and taxed as long-term capital gains. Every stock I own in my dividend portfolio now pays qualified dividends, which is going to be one of my main income sources during my early retirement. There's actually a way to live on dividend income and pay no capital gains taxes, and you can check out this video linked in the description below. And the reason why I only own 5 dividend stocks is that I truly take the time to research these stocks and read their earnings reports every quarter. And I also wanted to build up capital for each stock instead of owning 100 dividend paying stocks with $100 invested in each stock. My goal was to have 5 stocks with $10,000 each, and I have achieved that. My next goal is to own 10 stocks with $25,000 each, totaling $250,000. The goal after that is to own between 15 and 20 stocks with $30,000 each in the total amount of $500,000. The last goal before I hit my early retirement age is to have a maximum of 20 stocks with $50,000 each in the total amount of $1 million. So with a 4% annual dividend yield, my early retirement dividend income should be at least $40,000 a year, more the better, right? So the next account is my taxable brokerage account for growth investing. I don't talk a lot about this account on this channel, and the main reason is I don't want my channel to become an individual stock picking channel. In 2023, I'm focusing on diversifying my ETFs to make the portfolio more tax efficient. The biggest investment I have is the VOO, which is the Vanguard S&P 500 ETF. I'm also going to start building positions in the tech sector like the VGT ETF I mentioned earlier in this video. I'm also looking to build small positions in small and medium cap equity ETFs to make my portfolio more risk tolerant. And I'm keeping an eye on the sector ETFs, especially the ones that got beaten down in 2022. The only sector ETF that performed really well was the energy ETF, ticker symbol VDE, with a 60% return in 2022. Let me know in the comment section down below if you own this energy sector ETF. And I'm not looking to buy it for 2023 though, because I believe it's reached this peak. So I'll have at least 50 to 60% in VOO and at least 15% in VGT. And I'm looking to have 5 to 10% in small cap ETF, medium cap ETF, healthcare ETF, and communication services ETF, which was down over 40% in 2022. For individual stocks, I've owned Tesla for several years now, and I'm looking to own more shares in 2023. I also have Dropbox, and I'm a big fan of Dropbox. I've been using their service since 2012, way before the company went public. The other stock I own is Meta, or also known as Facebook. I'm not quite sure how Meta will perform in 2023, but I'm not going to sell it unless it's for tax loss harvesting, and I'm not sure if I'm going to buy more either. Google is a stock I started buying this year, and I spent, or actually last year in 2022, I spent almost $40,000 just on Google stock because this is a stock that I believe will grow and be around for a very long time, and I'm going to hold it and just lock it away in my drawer, right? And if it continues to trade below $90 a share, I'm looking to buy more in 2023. And I'm looking to build this growth portfolio and my dividend portfolio to at least $2 million in the next 6 to 9 years when I retire early. And as my income continues to increase, I'm going to continue to invest my excess income in these taxable brokerage accounts. And if you want to know more about how to save half of your income and how to start your FIRE journey, be sure to check out these 2 videos. So with that said, I appreciate you watching my video. Don't forget to subscribe, and I hope to see you in the next video. Have a good one.